And a huge week for Bitcoin. We have a host of major macroeconomic data set to decide the direction for Bitcoin here over the medium term. Bitcoin is just hanging below 27,000 here, forming a symmetrical triangle pattern here on the far hourly. Which direction could this break? What are the key price targets and what could trigger this in either direction? As you guys know, we want to blend technicals with fundamentals, with macroeconomics, and that's what we do here on the channel. So if you appreciate that, smash up likes, check out the links in the description if you want to trade any of the moves that support this channel. Now, important symmetrical triangle pattern. We're going to go for all the price targets here. But before that, I need to share with you guys what is leading to this drama right now. If I go to the daily chart and we just look at the week we've just had consolidating here for a while, we had days which were powerfully green and the days powerfully red, and then we rally and we give it all back up again. This is all centered around the debt ceiling drama. Now, you guys know we've covered this off for a while, and long story short, this always gets resolved. But the problem is markets have to price in the uncertainty. I've said it time and time again. We have 2 weeks before this gets decided. Do not be surprised to see another crazy volatile week this week. I'm going to show you what else we have jam-packed into this week as well, plus the week after leading up to June the 1st. If we do not hit a resolution by then, if Biden and his friends cannot figure out their political games, the US could default on their debt. Now, it has happened one time historically where one of the ratings agency had to notch down the rating of US debt down from the perfect rating down one. Okay, so that could have an impact. If that happens, we could see shockwaves. I tweeted yesterday that there was breaking news that the White House says that the stock market will crash by over 45% if US defaults on its debt. Yet still a deadlock as politicians struggle to agree a deal. Not a good look, right? And that's going to continue into this week. Now, towards the end of last week, we saw a little bit of happiness, right? We saw some positivity here on Friday and Saturday. That was because the markets were expecting that they were going to reach a deal this weekend. At the time of recording here on Sunday afternoon UK time, we are no closer to a deal. As you can see here from Biden, he doesn't think what they're asking of is acceptable. They're not closer to a deal, okay? So all of that's going to get unwound, in my opinion, on Monday when the markets are open. And we know Bitcoin is correlated to that. So watch out for crazy volatility when the markets open. Also, if you're not following me on Twitter, make sure you're doing so. I've just posted a tweet with my weekly roundup of TA. Go check it out. All the key levels explained in detail. Go and read that. And I do that every single Sunday. Okay. So we're in this symmetrical triangle pattern, okay? And this symmetrical triangle pattern, of course, can break in either direction. Now, of course, at this point, we headed into the pattern in a bearish context, okay? We come into this from a bearish perspective. So the consolidation bias is to fall to the downside. If we fall to the downside, you look to the left, like Beyonce says, you look for the pivot point, okay? 26.5. If you lose 26.5, you come to the bottom of the wedge, which obviously here ties in with our horizontal support at 26,200. That is the immediate levels you are looking for here to the downside. Now, if we get a positive scenario, if there's some good news coming out tomorrow that they're reaching some sort of a consensus in the debt ceiling negotiations, then we could potentially get a move to the upside. Again, you look to the left, you look at the first pivot point, 27.5. You look then to the top of the wedge, and you've got 28,300, and also a little bit of resistance here at 27,700. So those are the key levels here we're playing out for here in the short term. Of course, zooming out here on the 4-hourly chart, and you guys can see we're a part of a bigger triangle here, right? We've got a big pattern here forming, and this is part of a downward trend. Now I'm going to show you on the weekly chart, when we zoom out a little bit more, what context this provides. But so far, we've got a lot of resistance here. If we want to move to the upside, we're facing a lot of resistance. And the first level of resistance is this 4-hourly EMA ribbon, right? The 4-hourly EMA ribbon is not going to be easy to beat. Then, notching up to the daily EMA ribbon, you can see we face resistance from the daily EMA ribbon. Once you clear this daily EMA ribbon, which sits between 27.5 all the way up to about 28K, then you've got the very difficult challenges of 29,000, 30,000, and of course 31,000 here where we've got rejected from. That's the work Bitcoin has to do to the top side. So there's a lot of work to do here for Bitcoin. It's not just suddenly we can start moving and get excited. No, the bears are in control of this pattern, and that is why we're below our EMA ribbon. We run into our EMA ribbon, we got rejected. We ran into it again on Wednesday, got rejected powerfully on Thursday with what is a bearish engulfing candle, okay? Again, normally I would say to you, go watch my TA course. You can still, I think. Check the link in the description. I don't know if it works or not. If you've not watched my video, Skillshare decided to cancel my TA course. If it is available, it's free. Watch it because they're going to take it down soon. and then I don't know when I'm going to be able to relist it somewhere. So definitely go check that out while you've got the opportunity to do that, and you can learn all these things like bearish engulfing patterns, EMA ribbons, and all the things I'm talking about in this video. Okay, so that's where we sit. There's a lot of resistance here to the upside. But to add to that, it's going to be a painful week. It's going to be a painful week because on Wednesday, we get FOMC minutes. So on Wednesday, we're going to kick off with FOMC minutes. Then on Thursday, we get Q1 GDP. Okay, so US Q1 preliminary GDP figures. If that's not enough, on Friday, you get PCE, the Fed's preferred measure of inflation. We're going to get that on Friday, as well as the Michigan consumer sentiment. So a whole bunch of macroeconomic indicators coming out this week. And this week could be decisive for the Bitcoin price, because what I want to show you is something positive. Right? And we spoke about this yesterday, but we need to make sure that we keep this in focus. And that is that if you look at this weekly chart here, we are forming a very, very important reversal pattern called a cup and handle pattern. A cup and handle pattern is characterized by a rounding bottom. Right? When we were forming this rounding bottom, with the bottom coming here at 15,500 when Bitcoin wicked down on this horrible day in November, right? We then started curling up and we created higher highs and we trended upwards. This is good, right? This is the sign of a rounded bottom pattern. But as you can see, we've got heavy resistance from 30 and more minutely 31K. That's where we've been facing some resistance. So we headed into what is now forming a handle. Again, cup and handle patterns are very good reversal patterns. They're a good indicator, and particularly on larger time frames, they convert very well. So I'm feeling quite positive about this one. But again, it's going to depend on a lot of factors. And the first factor is looking at our weekly EMA ribbon, right? Look how beautifully this ties in. When we were breaking all the way up here up towards 31, who was calling for 25K? This channel. Right? When everybody was euphoric, when fear and greed index was full of greed, I was shouting, guys, this is not sustainable. We've had a crazy move here, all the way down here from 19,500. Can we call off a little bit? Now we've got it, and everybody's panicking. No need to panic, right? We're calling off into our EMA ribbon. The time to panic is if we lose this EMA ribbon. All of this right now is part of the script, right? And I'm happy to DCA the closer we get to our EMA ribbon. If we fall below 25,000, I know the details here are very fine, and it's a very fine line which we're trying to balance right here. But closing a weekly candle below 25,000, and we have to tear the script up and throw it away, because then we enter back into a bearish situation below our weekly EMA ribbon. That is not what we want, okay? Consolidating into it is fine, and then we can break from our cup and handle pattern, and here's where you're going to get shocked. The price target of a cup and handle pattern. Let me show you guys. Yep, that's that green line there, taking you all the way there to 45,300. Now, of course, I'm not suggesting this is just going to be boom, rocket 45,300. But the structure is setting itself up in the charts here that once we clear the neckline at 30,000, which we know is not an easy feat, right? There's a lot of resistance. In fact, let's bring out also the VPVR. We've not looked at the VPVR for a little while, right? And what you'll notice here on the VPVR, this is a very hotly contested area. But what happens once we clear this, guys? What happens once we clear this? Remember when I said once we clear this, we're going to have a nice move, right? We were looking at the VPVR in real time when we were making videos. As soon as we cleared that, boom, big candle. Once we clear this, I expect something similar, a nice positive move, because the volume becomes very thinly traded up in these levels, up towards 38, 39K. So I'm expecting a nice positive move here. Now, of course, there will be resistance, but you've got to look to the left. Look at the historical action that we've seen. When we fell from this candlestick, where the high of this candlestick where my cursor is, was sitting at 48,000. And we just fell. We free fell all the way to the downside here when we were falling in summer of last year. We held a little bit of resistance here, which is exactly where we're facing the trouble, right? No coincidence. We had a little bit of a cluster here. That's the same cluster we're fighting through here. If we can win this battle, things will get easier heading towards that 45,300 level. So amidst all the doom and gloom, yes, the bearish targets continue to remain intact, right? If I show you the shorter time frames, all the bearish scenarios are still intact. This head and shoulders pattern we've been monitoring, right? Let me just flip this up to the daily chart. Yep, it has a price target of 24. And unfortunately, it's still intact, right? It's still intact because we've not got above the neckline. If we look at the symmetrical triangle which we're forming, the price target's at 25K, still intact because we've not got past the apex. So short term, there is some pain. But the difference between 25K pain, the difference between us coming down here, getting rid of the overzealous shorts and then working our way upwards to play out the cup and handle pattern I just shared with you, is the bullish scenario. The negative scenario is us falling any lower than that. This is no good. coming down here to 23.6, we cannot afford that on Bitcoin, right? We would have lost our EMA ribbon. Now, there is a slim chance, which if we get closer to it, I will discuss. There is a chance that we could lose our EMA ribbon very briefly here, collect some support, and boom, off we go back to the upside. Okay, there is a chance. I'm just going to show you that on the weekly. You're going to have to ignore all the drawings, but it's for your purposes so you can visualize it. There is a chance that we could quickly come under here, wick under the intra-week, and get back above it. That's a very unlikely scenario, and I'd rather we avoid that. I'd rather we collect support in the EMA ribbon, higher than 25k, and then bounce off of it and get beyond 30, get beyond 31, and work our scenario this way to the upside. I want to see that. I don't want to see us coming into this scenario. It's too dangerous here. Going below our weekly EMA ribbon could result in us staying below it and it acting as resistance. And that's going to be painful. So there you have it, guys. There is a weekly roundup of what just happened. Plus, what's expected this week? Expect volatility. Expect pain. Expect more drama with politicians. What else are they good for? But make sure you're prepared for either way. The closer we get to 25k, the more personally I'm going to DCA. If we fall below 25k, we've got to tear up the script. Things could get messy. We could get lower price targets. And I'm personally going to make sure I've got a little bit of cash on the sidelines so I can buy some of those lower levels. If we see 23, if we see 23.5 or 24, I want to be able to DCA in those as well. Of course, not financial advice. Do whatever you want to do. Thanks for watching, and I'll see you in the next one.